Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here's the 4-hour price chart for Tesla Incorporated, stock ticker TSLA. So as we can see here, the stock is making a bit of an attempt to stabilize at lower levels. If you saw my video from yesterday, you would know that there was a very significant price gap here to the downside. This is sort of a post-earnings market reaction. But I would argue that it's probably a bit more than that. Because we are seeing a very broad sell-off in the market that, and this is bearish activity that's not just being directed at Tesla. Tesla and Alphabet, the Google parent company, released earnings right around the same time. And both stocks have sold off fairly massively. I just released a video on Google, Alphabet, and you can see the reaction that occurred there. Even though the Google number was actually not bad. I think they missed by a penny relative to the analyst expectations for earnings. The YouTube segment was a bit weak, but overall, the sell-off that resulted was not justified by the earnings release itself. So clearly, what is going on here is that we're seeing a broader sell-off in the market. There are many stocks that are getting sold off here. It's much harder to find a stock that's performing well rather than stocks that are declining. So there's really nothing different here. It's just sort of the market as a whole is really selling off at this point. But if we're going to drill into the Tesla price chart here, we do need to look at some of the levels that have been broken because there has been some damage that has been done to this chart. As we can see here, we're looking at this major dominant trend wave here, which is drawn from the prior lows at 138. Roughly 138.80, I believe. Yes, this would be the low from April 22nd. So, and then this extends to the highs of 271, which would have been posted on July 11. So, if we're looking at this price action here, we can see a very strong upward price trend that did cause the stock to enter into overbought territory for roughly a 2-week period, which is a very long period of time. So what that tells us is that this has been a very strong rally. And then in the process, we did break a very significant downtrend line here in the process. I won't go back. And look at those this broader trend line here because I have covered that in other videos. If you'd like to kind of see the broader context, you can go back and see some of the other videos on the Tesla playlist, where this is covered in a more in-depth way. But as we can currently see here, we're sort of coming into contact with this 38.2% Fibonacci retracement of this most recent trending move. This is important because I'm still viewing this trend wave here as the most dominant price movement. And as we can see here, the stock is trying to find some support in this area. So this would be the orange zone here. We've got this orange line down here. That's the 38.2% Fibonacci retracement, which posted at 220.65. Currently, we just crossed above 222. So it does look like we're attempting to find support here. But it's important to note that this level was broken. I mean, we can't really deny that. And we did close below here on the 4-hour price charts. This would have occurred during the July 24 trading session. So, we could see a bit of a bounce here. the main problem that I have with this is that we have technically broken this level. We have broken below here and closed below here. So that's a bit worrisome on its own. You could make the argument that we were experiencing a large price gap, and then that markets were volatile, and that it becomes much more difficult to sort of obey exact technical levels in those types of environments. Things just become more erratic and unpredictable, and slippage does occur. So some of this could be explained with that. I mean, if we did see a massive spike higher here, I would consider this to be a support zone that was not officially broken. You could see a small, kind of false break to the downside. But the fact that we did see a periodic close here on the 4-hour chart does sort of make me a bit more concerned that we could continue to see losses here, even though we are sort of posting a bit of a recovery. To the downside, the next level that I would be watching comes in at the 100 period exponential moving average. That would be this purple line here. Currently, this can be found at roughly 212. So that would be about $10 lower from here. And then from there, you're really looking at a test of 205, which is the 50% retracement of this dominant trend move. So if we did fall back to 205, essentially what that would mean would be that we've given back half of these gains, half of the gains that were generated during this sort of massive turnaround point in the stock, which did sort of occur during the second half of April. So there are some factors here to be watching on the downside. To the top side, I would say that this reversal has completed itself if we see a break above 255.75. If we do see a break above there, I would expect there to be sort of an alleviation of the downside selling pressure, because we would also sort of be removing this shorter term downtrend line that's been in place ever since the stock posted its all-time highs. So currently what I would mostly be watching here would be the activity in the trading volumes themselves. We're seeing some fairly severe spikes here in the negative direction. And then in addition to that, you do have this breakage in the upward trend momentum that was being shown on the relative strength index, the indicator reading down here. So, we're not quite into oversold territory just yet. The indicator reading is roughly 40.50 at the moment. So we could still fall another 10 points in the relative strength index, not in share price values. But we could fall another 10 or 11 points in the relative strength index before we start to reach oversold territory, and then that would be the point where you would start to really play a bounce and start to look for a more sustainable move to the top side. So these are the current levels that I'm watching. Here's the current market analysis for Tesla Incorporated, stock ticker TSLA.